Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, April 25th, nearly 10 minutes after market close here in Jacksonville, Florida, 4:08 or 4:09 p.m. Eastern time just changed on me right now at this very moment. And today was quite a volatile day, although the indices end up finishing green, as you can see on the left-hand side of your screen. We had Elon buying Twitter. That was kind of the big news circulating around the market today. But what we're going to look at today is, although the indices were able to finish green with a strong afternoon, let's look at the volatility under the hood, because there was some really brutal moves to the downside and a lot of cyclical / commodity stocks this morning. A lot of those finished off the lows, just like the market. But we're going to look at some of the underlying volatility going on in the markets at this point in time. So let's get right into it. What just happened? Elon buys Twitter, like I mentioned. Indices chop around, but they finish green and they finish off the lows. So performance-wise, G6 up about 1%, S&P up a little over 0.5%, Q's up about 1.3%, Dow up 0.7%, mid-caps up a little over 0.5%, Russell 2000 also up 0.7%, 60/40 up a little over 1/3%, and protection flat, as we are in all cash at this point in time. Market state remains in a correction. Although we finished green today, that does not negate the poor price action from the last couple of days. As Don mentioned in his video on Friday, we had a severe break of support and just very poor price action in general. We were a little bit stretched to the downside, so not necessarily super surprising to see that we snap back a little bit here today. But that's where we at with market state. There's no reason to necessarily change that, and the same goes for trend gauge. Don had medium, short, and market leaders all go to down from neutral on Friday. No changes there in that regard, and long term also stays down. So although we do finish green on the indices today, does not change our perspective on the state or the trend gauge at this point in time. So before we get to the tail of the tape, look at individual stocks, get to all the charts, look at interest rates, all that good stuff, let me quickly highlight myself here and Revere. I just want to point out my email. If you have any questions on anything I cover in the video, please don't hesitate to email me. I'll happily answer and get back to you. If you're interested in what Revere does, you can email me, or you can reach out to anybody here, Dan, Tim, Don, or Merrill at revereasset.com. So let's get into the tail of the tape. And I do have SPY over here on the right, not the S&P 500. So keep that in mind. But I've got SPY. I'll pull up the S&P 500 here in just a second. As we notated earlier, market state stays in correction. Headwinds remain the same. We have seen sentiment get a little bit more bearish and panicky recently, although we haven't really seen a big type of capitulation day in the same way that we saw earlier in January, February, and even some in March of this previous quarter. So put call ratio up at about a 1.16. We tagged roughly 1.3 or so today. So that is relatively elevated looking back over the last year, a year and a half or so. If you go all the way back to COVID, the COVID crash back in 2020, we did see some spikes up to the 2 and beyond range there. But it's worth noting the put call ratio started to get pretty elevated last week and continuing that this week. The VIX actually was up through 30 today, but as the markets rebounded as the day wore on, the VIX retreated, which is what you would expect to see. Closed basically right on 27, down about 4% from the close on Friday. And fear greed down just a tiny bit from Friday as well. It's at a 40. I believe on Friday it was a 41. So moving along here, as we said, Elon buys Twitter. Musk Twitter deal completed at 54.20. That is the offer he extended, I believe, about a week or two ago. That pretty much was the precedent to a lot of this chaos that has ensued with Elon and Twitter and them going back and forth. What were we watching today? S&P versus resistance at 4,300, 4,385 as well. We didn't make it up there, but support at this 4,160 to 4,200 level. This is what's important here. 4,200 tested and held. So let's go ahead and get the S&P 500 up on the screen here behind us so we can put it in actual terms there. There we go. Let's get the tail of the tape back up on the screen as well real quick. All right, so now you can actually see it in terms of 4,500. The levels make a little bit more sense. I know that can be confusing with SPY sometimes. QQQ-wise, we were watching this 335 to 337 level. That's kind of where that previous fib is 338.22. This is kind of the bottom area of the consolidation we were just at. Slash support at 317.45, which that is your March 24 low. Neither level was tested. 50 simple held. Don mentioned we're watching some, we're looking for 50-day moving average RS bouncers. And so we saw that with PanW, with Crowd, Costco, and Berkshire Hathaway. We saw oils get really demolished this morning, although they came back nicely as the day went on, but slicing right through some key areas like you see here with HAL and CVX going through the 50. PSA, this is a REIT, didn't quite make it to 380, and UNH also didn't quite make it to its 50-day. So that's the reason for no check mark or X in that regard. Third leg down, panic washout below the 50-day, like 124 and 224. And what we're referencing here is how extended below the 50-day the S&P got. We are not to these levels yet. At the worst today, we are about 5% below. So not as extended. As you can see here, this is 124. You can see a pretty good ways from the 50, 224, pretty good ways from the 50. Not quite to that extent to the downside here at this point in time. Only about 5% at the worst. I believe ended up closing about 3.5 to 4% below the 50 at this point. So action-wise, opened weak, traded weak pretty much for the better part of the early trading day. But we held this 4,200 support, and then as the day wore on, we saw some strength come in the afternoon, closed pretty close to the highs today. Notes-wise, I know Don put a lot of this or talked about this a good bit in last week's video. Very few of the 21 from the 21 have survived. Thursday and Friday, consistent but controlled selling, not really seeing that massive capitulation type candles to the downside, just kind of steadily dripped all day long with not seeing buyers step in. S&P 50-day minus 8% level, that's almost at 4,000 or 4,048 here, as Don has mentioned. And then also these 30 and 40-month moving averages on the S&P, on the Qs, begin to come into play a little bit more as we're starting to live below the weekly, daily moving averages. We're starting to live below the monthly or the 10-month moving average. So some of these come into play on a little bit of a longer term perspective. We'll take a look at those monthly charts here in just a second. So as we said, S&P opened week down 0.7%, closed up about 0.6, G6 up a little over 1, 60/40 up about 1/3%, and Grotection all cash. Sectors today, we saw bonds show a little bit of life, especially early this morning. We saw the dollar strong, cyber, which is your cybersecurity stocks, home builders, stocks, and software. So some of the more riskier or risk on type of areas showing some relative strength, while a lot of the commodity areas were really weak today. So oils, fertilizers, gold, silver, and miners and shippers really got hit hard. Like I said, a lot of those came back from the lows, but still finished down for the day. I mean, a lot of these stocks were down significantly this morning as well. No trades in the portfolio today, so beta stays the same at 0 there. Bottom line, indices finished green and off the lows, but elevated volatility remains. And that's the reason I have this in yellow. You can see just in the last 3 days, this is pretty wide and volatile action here on the S&P. It looks the same for most of the indices and most stocks out there. So we're going to get into some of that underlying volatility we've been seeing here in just a moment. And I meant to populate this here, but I don't believe I did. So let's just refresh this. And that'll give us pretty much where we were at on the close. I believe we closed almost right on 4,300 here when we're looking at the S&P. The main thing we want to point out here is this 4,160 to 4,200. That was a strong early mid-March support level. We need to hold this level, obviously, as we have now. You can see right here in January, that low is at 42.22. And then right here, this consolidation area. So looking to see if that 4,200 level can hold on there. And I apologize for not populating that. I completely forgot, but we closed right around 4,300 today on the S&P. Additionally, the 50-day and the 21 continue to decline here, 44.19 on the 21 EMA and 44.02 on the 50 simple. So let's get into the charts here. S&P 500, as we mentioned, let's get this refreshed one last time for you. Finishing well off the lows after a pretty crappy open this morning, and I'll show you a 5-minute chart here to show you kind of how we were looking. So initially weak, spike up, and then weak, come down all the way to almost 4,200 on the dot. and finish pretty strong here into the afternoon. This is the frozen slope that myself and Don mentioned, as there was pretty much no reprieve in the selling, just a straight 90-degree angle down here. But we see the S&P 500 bounce off 4,200 today and hold that level. Next level to watch is what happens here at 4,300. As you can see, we pretty much closed right on that level of interest. That's what we're going to be watching going into tomorrow as well. So obviously, today's low is imperative to be held. So you can set an alert at 4,282 on the S&P. And moving along here to the Qs. Same situation in a lot of ways here. More extended to the downside than the S&P, but you're going to want to set an alert here at the lows of today, getting back up about halfway of Friday's candle, excuse me, as you can see here, back to around the 330 area. This is that 334 to 335 area. You see how it's kind of the bottom of these consolidation ranges. It also corresponds to the January low and the bottom of these consolidations days here. So this is a big spot. Friday's high, excuse me, on the Qs, 335.56. You can set an alert there, as well as an alert at the low of today. That's kind of going to be what you want to watch here. But these two nasty days here don't inspire confidence. And technically speaking, the probabilities are not in the favor to continue to the upside here. Those two nasty days, you've got some work to do getting back up through declining 21, a declining 50, a declining 8 EMA. So the Q's got a lot of work to do to shape things up here, but first step is holding today's low. Moving along here to the rest of the indices, here's the Dow. As you can see, much closer to the 50 than the S&P and the Q's, but similar action. We were weak this morning, end up finishing near highs of the day, well off the lows, and basically getting up about a third of a way, halfway into Friday's candle here on DIA. Main thing you're going to want to watch here moving forward into the rest of this week is what happens if we run up into this declining 50, what happens if we push through that and get to this declining 8. That's kind of going to be the area you want to watch as these clusters of moving averages into the downside. Again, I would set an alert on all of the indices at the lows of today. IWM actually finishing green today on a day where oil did really poorly. Somewhat impressive here for IWM, but it looks just like all the other candles we're showing you. More or less finding support kind of in this same range that it found support in January. Same situation. I'd set an alert at today's low, 189.21. Subsequently, the first step is getting back above this declining 8 EMA. You see that little pink line? That's what it basically looks like on all the major indices. That's the first step. Keep an eye on that across the board here. And then lastly, MDY. Looks very similar to what you see there with IWM, finding support pretty much right around these January lows. And same situation, you've got the 50 and the 21 almost on top of each other and starting to angle down, and you've got a declining 8. So that's the first area you want to keep an eye on to the upside. What happens if we run up into that, as well as what happens if we can get above Friday's high. To the downside, keeping a close eye, set alerts on the lows of today. So 461.05 for MDY, that's the low for today. So let's get into the charts. And first, I want to show you a chart of the Treasury bond ETF. And you can see here, we tried to close above the 8 EMA for the first time in a while, basically since this big swoosh down here. Not quite able to do it. But we did make a little bit of progress to the upside, as you can see, up about 1% today. And then conversely, we'll show you TNX here, which is the 10-year note. And you can see that that actually did slightly close below the 8 EMA for the first time since all the way back here at the beginning of March before this big move. So rates pulling back a little bit, TLT moving up a little bit, could be part of the reason why we saw a little bit of strength in some of the higher beta, more growth-oriented stocks today. And we're going to look at those charts in just a second too. But first, let's take a look at Twitter. As we noted in the tail of the tape, approved for this 54.20 offer that Elon has put out. So that's something to keep an eye on. It's likely to go to that level, as you can see here, moving up in the after hours a little bit. But Twitter, obviously the big volume, kind of the talk of the day. Anything Elon does, obviously going to be noteworthy and garner a lot of attention. But Twitter, stand out in RS, but it's due to the buyout news. Microsoft and Google were strong this morning, ended up pulling back a good bit, and then it's finished stronger as the day went on. But again, on all of these stocks, anything I'm showing you here, first thing that it's got to be accomplished is it's got to get through this declining 8. And as you can see, Microsoft has not been able to do that on a closing basis since the April 5th here. So it's been better part of 2 to 3 weeks that it has not been able to close above the 8 EMA. And that is only about 0.5% ahead or above of Microsoft at 282.78. Google, it's going to look relatively similar to what you see here with Microsoft, just more extended to the downside. Broke this big 2,500 level of support. What I would be looking at is does it run into resistance now at 2,500? Does that flip from support to resistance? And that's also most likely going to correspond with this declining 8 EMA. So I'm pointing out the fact that they were strong today. And it's also worth noting that big tech reports earnings. A lot of the Apple, Amazons, Googles of the world, those types of names report this week. So that's probably going to cause some gyrations and swings in the market. But Google, Microsoft strong today. I mentioned the high beta / growthier stuff having some decent strength today. TTD up about 6%. You can see this is not a constructive looking chart. I'm just pointing out the fact that they were strong on today. And Upstart, kind of the same thing, up about 6%. But again, first step, you got to get through this declining 8. Haven't been able to do that on either of these stocks necessarily, but both of these up nicely today. But keep in mind, these are stocks that have been crushed and have not done very well this year. We also see the travel sector. We talked about this last week on the podcast. A nice bounce here from Marriott, and a very similar pattern you'll see here on HLT, Hilton. These hotels showing some relative strength, as you can see by the RS line angling upwards here. But I do want to point out one thing. Just because the RS line is angling upwards does not mean that it's necessarily going to save you money or you're not going to lose money. You can see here, even though HLT was attempting to break out, it was still down 4% here on this day and another 2.5% on Friday. So although this RS line is still going up, that's just because the market was going down at a pretty good rate as well. So keep that in mind. You'll see a lot of the more defensive stocks that have an RS line that looks kind of similar to this, but that doesn't mean that they're not subject to being punished when the market is being punished as well. Continuing on here, and I'm going to try and fly through this because I know I'm kind of going long. IGV, the software ETF, showing some relative strength today. Microsoft, Google, those types of names influence that, and it looks relatively similar. Again, first step, what happens at this 8 EMA? Have not really been able to get a definitive close through it since the beginning of April, and that goes for most technology or growth-related stocks. A couple more here. SOX was green today. A lot of the semiconductors trying to improve, but again, it's the same exact scenario as we just showed with IGV. When are we going to get a definitive close above that 8? You can see we kind of got one here, and then we got rejected at the 21. What you're going to want to see is a strong hammer that gets above that 8 EMA by a good amount, not one that just barely gets above it. One that's a little bit more like this right here on SOX. That's what I'm looking for on a lot of these beat up sectors if that were to occur. I mentioned some of the more defensive stuff here. Procter & Gamble ends up having a nice day. This is another example of an RS line that's going straight up, but you are still subject to price declines, although they were very mild on PG on Thursday and Friday. Much obviously down less than the market, but still down today, having a nice day, up more than the S&P. So Procter & Gamble kind of holds up at this 160 level. This morning it was not looking very good, but as the day wore on and the market came back, so did PG. Ulta, another name that's actually still above the 21, bounced off this 400 level, had a pretty strong close here. But again, keep in mind, this is still a pretty nasty reversal. Ulta down almost 10% here from 440 right around this day on Thursday to a low of 400 today. So a pretty steep pullback over 3 days, even though this is still a constructive looking chart. And then lastly, we mentioned cyber stocks strong today. I'll show you one here. PanW having a nice day, up about 5%. If we can get that to load for us and kind of bouncing off the 50 there. Next test is the 600 level and the 21/8 EMA. On to what was not so good, and that would be oils. So like I said, they did finish off the lows, bounced, maybe reclaiming the 50 here on XOP, but this was a pretty nasty gap down in candle. As you can see here, XOP was down about 6%, 6.5% at the lows. So was XLE. Those are your oil and gas ETFs. Not super common to see those down that percentage all that often anyway. But just to run through a few of the names here, the oil and gas service providers, they were the worst of the day, as you can see here. Halliburton, just brutal action and a really nasty candle, unable to reclaim the 50. Oxy, which had been one of the strongest, ended up undercutting and reclaiming the 50, still down about 3% on the day. And lastly here, CBX, kind of a similar story, similar to HAL in the sense that it sliced through the 50, wasn't quite able to reclaim it. So some not so great action here on some of these oils. We did see crude oil pull back a little bit over the weekend, so certainly contributing to that. Fertilizers as well. I'll show you quickly here. This is the volatile action that I was talking about that we see under the hood. Some nasty pullbacks for some of these names here. NTR down almost 8% at the lows today. MOS down nearly 10% at the lows today, finished down about 5, bouncing off the 50. Now, obviously, it's important to keep in mind these were extended and had great runs, but the volatility of the last few days has still been brutal on a lot of these commodity and cyclical names. John Deere is a perfect example of that. This is an institutional grade name, from 450 to 380, or the low of 372 in just a matter of 3 days here on John Deere. Agco, a very similar looking chart, just a waterfall type action over the last 3 days. And these were some of the most constructive looking charts in the market up until this 3-day sell-off. GDX, we mentioned the miners had a tough day. Just same kind of thing, from 42 right here on GDX to 35 in a matter of about a week. Just a really nasty move down, a failed breakout that turned into a fast move to the downside here on gold miners. ZIM, this is the shippers. This was down about 11% at the lows today, finished down 5.6. And this is, again, what I mean by some of that underlying volatility. Obviously, we know the indices are trading a little volatile right now, but we're seeing stocks also trade volatile, particularly some of these that have been on nice runs, showing relative strength over the course of this year. So ZIM and the shippers not having a good day. Uranium, a commodity ETF here that had been acting really well. But you can see this is a sharp move down for uranium just since 420 here, from 92 to a low of 72, a $20 move to the downside in a matter of 4 days, or 3 days really, on uranium. So and these are the areas, this is commodities, you know they can be volatile, but these are some really nasty moves and on a lot of these on some elevated volume. Moving along, and I am almost done because I know I'm going long. Netflix continues to be a dog, down about 3% today. It seems that nobody really wants this stock, even though we had almost all the other big tech names acting relatively well. Netflix, not so much the case. And then just running through the sectors very quick here. XME, one of the worst performing sectors of the day, looks kind of similar to what you saw on like CVX and HAL. Gap down below the 50, not quite able to get back above it. We also saw XLRE. Although it wasn't down very much, it did lag the markets, as you can see, down about 0.5%. Could potentially be a nice undercut and reclaim of the 21. Time will tell on that one. And then XLU was also relatively weak as the day went on, as you can see, down 0.7, not showing relative strength versus the market today anyway. So that is pretty much going to wrap it up. I know that was a ton of information, but I hope it was valuable. I will not be on Thursday's video or the podcast this week. I'll be out of town. So I hope you all have a great week, have a great weekend, and I will see you all next Monday for my daily market insight video. So thanks, everyone. Have a great day.